Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday evening, and this is September 10th, 2020, about 6:40 p.m. Central Time. Well, as you can see, we're getting a bit of a rally after a big break in the stock market. It was all over the board today. The markets are acting as though they still want to work themselves down a little bit. They're getting oversold on this break, and you'll see that in a moment here. And the bounce that we got from the lower Bollinger Band this week, this rally, in some of the cases, got to the 18-day average, and that's where I was looking for the market. For those of you that get my written reports, know that that's what I was saying. I thought the market was going to fail there. If we take a look at a weekly chart of closes, you're now down about 150 points in round figures from the most recent high close. For the week, you're down 2%. We've been in a corrective mode, and you're still in one. You haven't left it yet. When you take a look at how this chart is acting, when you put the swing lines on, you get a much clearer picture. You have a higher high, a lower low. You are not in a trend. The market has been making stabs on the rallies back up towards the 18-day average, where I think it should encounter a lot of resistance. The 18-day average, to me, is the number I call the line in the sand. It's where markets often go to try to figure out where to do, be it an up move from or a down move. So when you get down hard, fighting at that number, very common. I wish I could have had a big break market to show you what I mean on the comeback for the market, but we haven't had one since, oh God, beginning of the year, basically. So just looking at this, I don't see a trend at this point in time. And when I look at these slow stochastics, they're oversold. So they are telling you, nah, stay away. If the market falls again, look for support at the potential of the lower Bollinger Band, and resistance is still 34, 32.5. In the NASDAQ, the pattern is one of a higher high, and I think you'd agree, a lower low in the market. Again, you tried to find support right at the lower Bollinger Band. You haven't been able to get up to that 18-day average of closes, and you're oversold. This chart's what we call a vertical price decline. You have something similar just like that in the S&P. When they come out of left field. That's where the stops get hit. Market's not got a chart pattern to trade off of. That's my analysis of it. I was looking for a rally back to the 18-day average after hitting the lower Bollinger Band, and you've done that. So that's your resistance point. Again, you're not trending. You got a higher high, lower low, nothing to do there. And in the Russell, you missed badly of even getting to that 18-day average. What the Russell's acting like is a market that just wants to hang around the lower Bollinger Band and drift to lower prices. But all of these indices are not giving us a pattern that is a bull or bear trend. They are just wandering back and forth. In the VIX, if the market were to get under 2160 and close under 2154, it would turn bearish, and you might make a run for these lows again. If it's going to hold, it's got to do it here. This is a rough chart. And, you know, given that the VIX isn't rallying at all, it tells me that the traders are not nervous about this pullback in the market. If they were nervous, you'd be up a lot more than that. I've moved to the D-SPONs as I said I would yesterday. The trend is down. You have lower highs and lower lows. To negate the downtrend, you got to get over 177. I would expect the pros are selling this market at the 176.17 level, not wanting it to get back over that number. And if they could break it and get something going, well, maybe they're looking at the lower Bollinger Band. In the notes, it's a flip-flop. You've got different parts of the curve yield doing very different things. This is right now a pattern of higher lows, but it's got lower highs. Do you see that? That one to that one. You're pretty neutral on this market. It's fighting its battle at the 18-day average of closes. Nothing I can say there. In the dollar index, you dropped just enough to take out 92.71. Got actually today to 92.70. You're no longer in a trend. So this springboard that you had from the lower Bollinger Band to the upper one has ended. You're back into this sideways action that you're having in the market. In the eurocurrency, what a trap for people. I teach that you don't go through European Central Bank major reports, when you're going to have a press conference, Ms. Lagarde's going to talk. I teach that you don't go through the Federal Reserves. When Mr. Powell's going to speak, you've got to understand that the algos take over the trading and you don't stand a chance in front of them. The market's just going to move all over the board. And you made a pretty dramatic move today. You got up as high as 119.18. That's a big move. The upper Bollinger Band was 119.44 roughly, and that's what I was looking for the resistance. By day's end, it had given up just about everything. I think you closed, 17 points higher, gave up the 100 points, and tonight you're back down here about unchanged to slightly lower. There is no trend. I'm saying this on so many markets. You've got the lower low, higher high in a sideways action. I don't have to apologize for no trend. I know you realize that, but you're just not trending. And in the end, it's pretty much of a drifting game back and forth in here. It's the same type of thing. You've got lower highs, higher lows. The legacy's the higher lows. The bias is down since you're under the 18-day average, and momentum's totally flat. In Bitcoin, you held the first combination challenge of the 100-day average and the lower Bollinger Band. You'll hear me often tell you that that's a pretty big support zone. That doesn't mean it's enough to kick the market up and away. This market is not trending. You got a higher high, lower low. Again, I wish I had a recording button that I could push. The differential between the Brent and WTI falling back into the 2.32 level, and that means that they're both down. And as I've said, I'm just not seeing anything friendly in this market. This was a breakout of this pipe. And these people that are caught means to me that each good rally in the market, people want out of this. And I think that the longs are caught in it. You are oversold. I'll wait until something comes out of that. Same thing in the slow stochastic, trend down, riding the lower Bollinger Band. It's called that gorilla glue trade. And believe me, if you embed with that, it even gets worse. So looks to me like a pretty important top. Yesterday I thought gasoline looked pretty weak, and it still does, and you're riding that band lower here as well. And last in the nat gas, this is a cover short area in my opinion. What do I teach? The first time you hit a Bollinger Band, I don't care if it's on the upside or the downside, that's where pros take some of the money off the table. I can't tell you if they take it all or the other part. I'm not part of their account. But if you understand that 5% of the time you trade out of the band and you play the probability that 95% of the time, that's how the algorithm is built, you'll stay within it. They're playing the probabilities. They're doing it better without emotion, and that's what they're looking at. So that's what I see. I don't see an awful lot to do out of that. You know, we talk here about all these technical parts. If you haven't seen our guides to technical indicators, volumes 1 and 2 from our good friends at Modern Trader, you want to. And what this does is it teaches you, it's a primer. Each one's about 20 pages long. Great graphics. All color, you can print them out on your printer, we'll send it to you, and you just hit the link and bang, you've got them all. But it explains money management, what spreads do, what they can tell you, the Arun indicator, price-time relationships, Elliott wave, options primers, money management, so important. How do you get this? It's free. Go to our website at www.iraepstein.com. The bottom right, you'll see free offers. Just click that. I'm Ira. You have a good day, and I will talk to you all tomorrow.